for you and see what you can imagine was a possible play from this. Okay, so here's the trigger. First and foremost, here's the trigger. I will zoom in for those of harder sight. You can see here, index arbitrage. So we're going to be buying the S&P, we're selling the FTSE, and we're shorting the pound dollar. The time we're doing this is 11:30 on the dot. 11:30 on the dot. Okay, so we're doing this at 11:30 today. So obviously that's going to be the 11:25 candle on a 5-minute chart. Okay, so in a 5-minute chart, we're doing 11:25 candle. So the 11:25 candle is this green candle here. There it is there. Okay, so there's the 11:25 candle. So we're shorting the pound. Okay, so we need to get the pound value. So we're shorting the pound. Usually the good thing to do here is not chase it because you'll nearly always get a pullback. So you don't chase those trades. You wait for them to pull back. So 27.10 sell side pounds. 27.10 sell side the sterling market. Okay. 27.10 short. Okay, so 11:30. 11:30, so 11:30 just there. Again, you'll be able to see the price that was on the S&P at the time. So it's going to be that little S&P candle there. So there's the price on the S&P. We'll call it 44.74. S&P 44.74 for a buy trade. Now, obviously, at exactly the same time, if we go back to that time again, and we look at the pound, and we look at the FTSE, of course, you can see where the FTSE trade is. It's on the one off the top tick price. There it is there. 11.25 candle is there. So the price that we're getting on that one is 7,481. 7,481. Okay, so we're selling the FTSE at 7,481 short. Okay, so let's take a look at the present moment in terms of prices. So the present moment in terms of prices, the pound is currently trading at 27.15. So the pound is trading at 27.15 at this point in time. Having just spiked, of course, in the last short while. But obviously that's okay. We can look at that as part of that spread trade. The S&P is trading at 44.68. So the S&P is trading at 44.68. And the current price on the FTSE is currently 74.63. 74.63. So obviously when we're looking at that, we can see that there's a couple of interesting elements to it. Of course, the big winning trade is, of course, the FTSE short sell. And we can recognize that the FTSE short sell, of course, is plus 18 points. Plus 18 points. Now, the S&P trade, of course, is losing money, but the S&P is losing 6 points. Pound and dollar, about the same in this one. So this is about the same value, 10 quid versus $12.50, of course. You know, on a point basis, so obviously I have to skew out some of these. And obviously on this trade here, we're losing 5 points. So obviously at this point in time, it's done okay. It's made money. It's not made a lot of money depending upon how you skew it, of course, but it's certainly not lost any money. It's certainly not going to have lost you any cash. Now, at one stage, this trade was actually doing very well indeed. At one stage, this trade was doing very well, but obviously the big spike that we had coming back in here, which was carried on by the blue line as well, of course, was obviously where we started to see everything starting to chop around a little bit. And that's exactly why we ended up finding ourselves at the top edge here, which is when we got some short sterling back into play. So it's a small profit. It's not much, but again, it's an index arbitrage. You could have easily have made up your mind to chop some of these at break evens if you wanted to. You could have easily have made up your mind to chop some of them at break evens and walked away and done something else with the trade. But the point is that you have the ability to do whatever you want to do with this as a position. You can leave the winning trades open. You can close off the losing trades. You can close off the losing trades and leave the winning trades open. There's a lot of options around these narratives. The point is they're giving you options. They're giving you choices to make. If you like the choice, of course, then of course you can obviously turn it into an alpha. You can turn it into a double alpha. You can turn it potentially on occasions into a triple alpha, as we saw last week with the euro and the DAX. Our exit on bonds was right. You can see that for yourself. The measure was a good exit price on bonds. That was worked out rather sexy. Bottom ticking the bond price effectively into the 5s. It has rallied. I haven't seen an opportunity to resell it on the rally. That would obviously have been the perfect price area around about the 21s, 22s. I haven't seen the opportunity to do that deal. So for me at this point, no trade. No trade for bonds. We're obviously just 22 minutes ahead of the cash open as well, guys. 22 minutes ahead of the cash open. There was a couple of opportunities on oil. Did anybody fancy it? Let's take you into the benchmarks. Did anybody see a benchmark trade, for example, in here with this massive